taxpayers note starting today. The new tax regime that was introduced as the default tax regime will be default from 1st of April. With the introduction of the new tax regime, taxpayers will need not maintain a track record of travel tickets as well as rent receipts. The income tax rule changes from 1st of April will make sure that taxpayers can get rid of a complex tax planning structure, and changes will be simplifying tax planning for the authority as well as for you, the people. Now, with the introduction of the income tax rules changes from 1st of April, the basic exemption limit has been elevated from 2.5 lakh rupees to 3 lakh rupees. Now, what does it really mean for people who are trying to save, and what other changes will also come into force? To discuss that, with me is Kartik Malhotra. Kartik, very good morning. Welcome back.
Thank you so much.
It's 1st of April. A majority of few changes will be kicking in today. What really changes for taxpayers?
So I think let's start with the basics, the brass tacks, and what you mentioned absolutely correctly, that the new tax regime is now going to be the default tax regime, unless of course you decide to opt for the old tax regime. Now, what are the slabs within this new tax regime? I think this is something which has been in effect for a while now, and it kicks in from the 1st of April, where you have no tax on salary up to 3 lakh rupees. So up to 3 lakh rupees in the new tax regime is absolutely zero tax. And then the tax slab increases 5% every 3 lakh rupees. So from 3 lakh rupees to 6 lakh rupees, there's only a 5% tax on the balance 3 lakh rupees. Post 6 lakhs, 6 to 9 lakhs, you will see a tax slab of 10% kicking in, thereafter 15%, thereafter 20%. And then for those who are drawing an income of 15 lakh rupees or more, will be subjected to a 30% flat tax rate. Now, interestingly, for those ultra high net worth individuals who make 5 crore rupees or more every year, the surcharge has actually been reduced from 37% earlier to about 26% now. So these are the broad changes that come into effect from the 1st of April, which is today. But that's not all. There are also some positive changes coming by way of EPFO. So I think interestingly, what the EPFO has decided to do now for employees who are switching jobs, you don't now have to literally make those claims of transferring your old PF balance from your old employer's linked ID to the new employer. This is something from the 1st of April that the EPFO is going to do directly. So every time there's a job change, you don't have to manually fill up those tedious forms and log into the EPFO website to transfer your balance from one account to another. It is going to be absolutely automated. So every time you start your new job, your old balance reflects in the new ID, which is linked to your new employer. So no manual paperwork to be done.